Welcome to Make Your Money Matter with Brad Barrett, the show that aims to change the way you think about wealth management. Brad is a certified financial advisor, established radio host, and author of Retire Right. He is a managing director and partner at One Capital Management, an SEC-registered investment advisory firm managing over $4 billion for clients across the nation. Brad and his team are dedicated to helping clients protect and preserve their assets so they can reach their investment and retirement goals. And now, your host of Make Your Money Matter, Brad Barrett.
Welcome to Make Your Money Matter, the show dedicated to helping you create a better relationship with your money. I'm your host, Brad Barrett, and it's my goal to help distill the best ideas when it comes to your finances so that you can make more confident money moves. Here at One Capital Management, our mission is simple: to help our clients and you listeners take control of your finances and build the life you deserve. Friends, today the challenge is no longer the access to information, but rather it's finding the right information. And more importantly, how that applies to you. And that's my commitment to you here today on the Make Your Money Matter podcast, because after all, your money matters. And knowing how to plan your financial future is vital to your financial success. I'm going to take a little bit of a segment off of some of the tax conversations, some of the quarterly data we've been going through over the past couple weeks, and I want to talk to you about investing. Just good old, pure investing. And what I want to share here is a little bit of my story of when it clicked for me. And I've been thinking about this past week because I've had a lot of reviews in the first quarter for our clients and talking through what we saw last year in the markets and, really what we're going to kind of see this year, which is the more volatility, obviously the unknowns of further interest rate hikes and things like that. But let me give you something very openly and candid from myself. At age 22, I signed up for a car loan. It was around $22,000, something like that. And it was around $400 a month for 60 months. Now, there's a reason why I'm telling you this story this way. When I realized that, and I was doing the math after being a financial advisor for a couple of years at that point, I had realized something, that if I invested that same $400 that I was about to drop on a car that I was financing at the time, if I invested that same $400 into a managed portfolio, like what we do here at One Capital Management, and I put a hypothetical 8% return, and I was using that simply because I had at that time at 22, I had maybe a 30, 40, 50-year time horizon. So looking at historical data, that was a pretty conservative number if you look back on it, but I used 8%. And I realized this: in the first 10 years of that number, it would have grown to $72,000. In the 20 years, it would have grown to about $232,000. And in 30 years, it would have grown to almost $600,000 with that same $400 I was about to drop on a depreciating asset of a car. It was never the same for me after that. And I share that simply to say, as I talk to clients about, this year's 2023, the contribution rates have gone up. It's now $22,500 versus $20,500. And those of you over 50 can actually contribute up to $30,000 with the catch-up. It reminded me as to my why when I first got enrolled. Now, mind you, I've been in the financial services industry since I was 16. I've done this half my life. But it was at 22 when it really clicked. Like, I knew what I was doing. I was managing, portfolios. I was working with clients, and I understood, the reasoning, the methodologies behind it. But me personally, when it truly clicked, was that moment. Now, I don't know if I'm speaking to someone right now where you might have had that moment as well. Maybe you haven't, and maybe you've talked or listened to people. Maybe you're working with me as a client right now, and I've shared something with you that might have clicked or just hasn't yet. First and foremost, I want to say, once you start realizing some of the things in hindsight, we look at hindsight sometimes like, what we should have done. When in reality, I think sometimes we need to look at it more of what we could have done better and what we should do now. I mean, look, don't beat yourself up for not investing in something or maybe selling too early after, let's say, a stock or other investment you might have made have skyrocketed, because you're comparing yourself to what I'll call a quote unquote perfect decision. Because remember, hindsight is 20/20, right? We always look at stuff in the past through rosy glasses, the good stuff, right? We kind of forget the bad. And then we kind of tend to highlight in our brain and our emotions the bad, and we tend to talk about it. Like, think about this logically and from a psychological perspective. Most people you might talk to, they'll remember something in their past that it might have happened to them in a negative aspect, and they bring it up in certain conversations, right? Because it hit them somewhere in their body at their core. It could be financial, it could be something else that has stayed with them. And because I'm sharing this simply to say, if you look at it from a money perspective, there will be plenty of other future opportunities in the future. And focusing on finding those, I think, is more important than focusing on what you may have missed, let's say, in the past. Put it this way, your success depends on the risks you take, and your survival depends on the risks you avoid. I mean, that sums up me as a portfolio manager for all my clients day in, day out. I remember an economist used to say that I used to follow, and I always loved this. He said, your job as an economist, as a portfolio manager, is to be less wrong more often. Notice in these statements, and I want to share this with you personally as well, that perfection is not in there, because perfection personally is not something we can all attribute to. We can go for progress, and we know, and at least for me in my faith, that he doesn't expect us to be perfect, because that's not who we are. We are broken people, and we do this by trying to attach us to perfection in maybe our investing, in our savings, our debt, whatever it might be in the financial world, and then we also carry that on into our life. So I really want to share today, when it comes to investing, more about staying the course. Now, I know this is more of a general topic this week, but I've found that I wanted to deviate off of the tax season conversations, and it's coming up a lot because of the volatility we've seen. I mean, I've shared this a couple times this year alone, that, the past 15 years or so, we've been relatively spoiled, and I think that's okay to admit. We've had low interest rates, good markets, we've had our stuff, right? We've had Brexit, we've had government shutdowns in 13, we've had tumultuous elections, we've had a pandemic, we've had our stuff for sure, but it's been quite a run. And so this little, breakdown, if we will, or this reset over the past 12, 13, 14 months is something to take hold of. And what I want to share is, and I've been talking about this a lot, is what you do now sets the course for the good years ahead. And as I shared before, what you do today has a lot to do with where you're going to be tomorrow. And so when we talk about investing and staying the course, I'm not saying just to go blindly, right? Take discernment into it. Take discipline into it. Make sure you talk with your advisor. If you're not working with us, reach out to us. And I want to hit home on something that I was thinking about, and I actually kind of read a really cool article on this, and I thought it might be pertinent to all of us when it comes to the investing world.
Stay connected. Get frequent updates on the show. Follow Brad Barrett and Make Your Money Matter on most social media platforms. And catch full episodes of Make Your Money Matter streaming now on our YouTube channel. To schedule your no-obligation appointment, go to onecapital.com or call 805-410-5454.
Hustling to survive and hustling to advance, it's the same weight, at least on our minds and emotionally, but it's a different muscle, if you think about it. Now, obviously, that's out of context a little bit, but academically, emotionally, economically, it applies across the board. I mean, joy itself in life, isn't always involuntary. We have to almost manufacture it in ourselves to stay the course on certain things consciously. And so when it comes to your investing, we can get beaten down. I mean, shoot, the news nowadays, just alone, you watch a minute of news any given day, they're going to sell you the fear. And I'm not saying there's validity in that. I'm not saying there's not validity in it. I'm just saying that it's important to filter it and make sure that you're not deviating off course or talking with someone about it, because money has a huge stronghold on our heart, on our emotions. I shared a couple weeks ago, that money has a fine place in your wallet, in your bank account, but it really shouldn't be in your heart. And so the reality of what I'm trying to say there is how much of money is dictating what you do versus what you're doing for money. And so we want to be able to make sure that we attain those goals and objectives and really map out mathematically where you need to be to live the lifestyle you would want. So for those clients listening who are in retirement that we've worked together, you've likely heard me talk about this and really more the psychology, because it's different. Now, those of you who are listening who aren't retired yet, this is a really good platform to understand the mindset shift. And I think we realize that if I can just attain, let's say, $1 million, I'll be set. And we'll mathematically, like I just mentioned, be able to design that for you for a sustainable distribution rate. But I want to tell you a story. In 2002, there was a 19-year-old garbage man who won $15 million in the lottery. Now, if you look at this story, he spent all of that $15 million on drugs, gambling, and prostitutes and became a garbage man again. Now, I'm sharing this simply to say that money itself doesn't make you rich. It's what you do with it. And that depends on your mindset. Essentially, what I like to say to people is money doesn't change you necessarily. I think a lot of people feel that sometimes. They've heard that statement before. It illuminates who you already are. And here's what I mean by that. If you're a mad person, just generally, money's not going to change that. You're likely going to be more mad about different problems. If you're a giving person, likely more money on the table or what you've saved, or in this case scenario, like a drop in from a lottery. We all fantasize about that kind of stuff. So it's okay to talk about the emotional ties here. If you're a giver, likely you'll be giving more. If you are a spender, likely more money will make you a spender. So it doesn't necessarily change you. It illuminates who you already are. And so I really would challenge you today to kind of check your heart on that and kind of say, okay, who am I when it comes to money? If I had more money, what would I do with it? I mean, we can all fantasize and say, if, a stork dropped off $1 million on my doorstep, I would go and pay off this debt and this and put this aside and buy another property, whatever it might be. But the reality is, and I can tell you from 2 decades nearly of experience, that might be the first 6-9 months of that, but then it'll likely go back to the behavioral traits that we already are. So I think it's really a good point when we talk about emotional investing and really just investing in general. It's a DNA type of mentality. Think of the mindset I was talking about like a glass, like a 12-ounce glass. The bigger you are, the more money you can handle. But really, unfortunately, most people in their financial, intellect, let's say, never grow beyond the size of a shot glass, to give you, an example of the size glasses I'm talking about. So every bit of money that goes over their capacity, they'll basically, blow it away until they're quote unquote back to normal or back to what you were before. If you were a spender, you'll be a spender again. So it's kind of like we don't kind of grow our knowledge, and we don't really, change who we are, because we get in this grind of working and saving. And look, life's expensive. I'm not downplaying, the things that we need to have for our families and for our lifestyle. But I think what I want to share with experience from my side of the coin when it comes to, working with clients for so long, is that a lot of us share the same issues, and a lot of it's a heart issue, and a lot of it's, just getting through things and realizing we're being subliminally marketed to left and right. And that's okay, and I always say we want to categorize needs and wants. I've always said this before too, is you want to almost treat your deferred compensation contributions like your mortgage. And here's what I mean by that. Like, you haven't called up your bank most likely and said, hey, guys, I'm just going to reduce the mortgage payment for a little while. I'll get back to you maybe 6 months from now. How many of you have said that to ourselves? By the way, I've said this to myself too with our 401k for Veronica and I. I mean, I'm not immune to this by any means. And I've seen this multiple times where it's like, I'm putting $500 a paycheck. I'm going to bring that down to $250 because I'm doing some things over here. I'm whatever it might be. And I'll say, I'll get back to it. We could never do that with a mortgage, right? We know that that's a necessity and that's part of, just our obligation. Why would we do that with a bank who doesn't really care who we are necessarily, but we'll do it to ourselves? Like, we'll do that to ourselves because we can. But I would say we want to have the same kind of love for ourselves as we would, or same type of love and respect and maybe obligational, tendencies that we would with a bank within ourselves. Years ago, I remember talking to a buddy of mine who was working out with me for a little while. And for most of you who know me, I'm a pretty avid a gym goer and runner. And that's a part of me and my ethos. It's a mental clearing for me. I love to run and I love to work out, and it just gets a lot of stress out. And I remember talking to him one time, and he goes, look, I want to be in good shape, but I refuse to do anything to make that happen. Those are my terms. And I was kind of like, well, what do you want me to do with that? And I think sometimes we tell that to ourselves about investing. I want to grow wealth and I want to look over the fence and see what that other person has, but I'm not really willing to do anything to make those changes. And I'm not saying that's for everybody, and I'm not even speaking to anyone in particular. I'm just saying that it's important for us to each kind of think through some of the changes that we want to see, because it starts today. Remember, your success tomorrow starts today. I mean, I know that sounds motivational, but it's the truth. And you look at money and time, and I always talk about how those two are intertwined at all times. The more time you give yourself, and by the way, it doesn't mean you need to be 25 and doing it. Like, if you're 50 right now listening, you didn't miss out on it. It's what you do today. Don't worry about yesterday. Focus on today. Look at your cash flow, find some investing, find some, debt reduction if you can, moving cash flow aside. But remember, when it comes to debt reduction, as I've always shared, you got to go to the core root of it. If it's overspending, you got to fix the overspending first before you pay off the debt. Because if you pay off the debt, you're just going to go right back into overspending. So it's important to that's where I was bringing up some of these notions of it illuminates, who we already are in a way. So I know today was more of a high level view of investing and those kind of things, but I really wanted to chat with you guys. And it was on my heart over the weekend, and I wanted to share that with you today and bring some stats in and some stories in there that I've seen, that I wanted to bring up, and even some sayings there, because again, the success you might have depends on the risks you're willing to take, but your survival also depends on the risks you avoid. That's like sums up portfolio management all day long. Trying to go and ride the lightning on one stock or one position, that has a lot of inherent risk to it. It might pay off, sure, but really, what are you avoiding in terms of the survival aspect of that? And I think it's really important when we talk about investing that, it's early and often, and it's trying to, live on less than what we're making. And those are the recipes for all of us, no matter where you are listening right now, at whatever stage or season in life you are, it can happen today. And so this pertains to everybody when it comes to emotionally checking yourself on staying the course and making sure that money's working for you. And that's a great time to talk with your advisor. And again, if you're not working with someone, please reach out to us. We're happy to help and go through some of these items for you and your family. Before we go today, if you found anything helpful and want to learn more, visit our website at onecapital.com. You can also call or text us. We want to help. There's no pressure here. We don't treat people like a number. We value our relationships. It's the lifeblood of what we do. So click, call, or text us today. If you're not following us on social media, you should be. You can follow us at Make Your Money Matter, where we're sharing great information on all of our social media platforms. And as I often say, if you enjoy the show, share with someone you like. And I guess if you don't like the show, share with someone you don't like. But until next time, always remember, make your money matter.
The information in this show is educational and general in nature and does not take into consideration a listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.